Hello, folks. This is Adam Zuercher with Hixon Zuercher Capital Management with our February 2014 Market and Economic Update. In today's video, I'll be talking about some of the events that drove markets during the month of January, and I'll also be looking ahead at what might happen in the coming days and weeks. Well, markets ended the first month of 2014 on a down note, driven largely by an emerging market currency crisis that is affecting the economies of countries like Turkey, Brazil, and South Africa. While these issues haven't affected the U.S. economy, they are being felt by volatility in the U.S. stock market. For the month of January, the S&P 500 was down 3.6%, the Dow lost 5.3%, and the NASDAQ dropped 1.7%. While it's never fun to watch a sell-off, we're happy to report that the U.S. economic indicators show that the economy is still growing modestly. Investors got their first look at fourth quarter GDP, which clocked in at a solid 3.2% growth, giving us high hopes for 2014. Earnings season also began in January, and with nearly half of the companies in the S&P 500 reporting in, earnings growth now stands at over 7%. This is the best showings that we've seen since the fourth quarter of 2012. While the December jobs report showed a troubling decline in job creation, January's weekly unemployment claims painted a rosier picture. This could indicate that the December report was tainted by seasonal factors. This morning, we got news that there was a significant bounce back in new jobs created during the month of January, putting the labor market back on its positive trend. The Federal Reserve also met during the last week of January and voted to continue its program of tapering, slowing their monthly bond purchases by another $10 billion to $65 billion per month. Investors view this as a sign of confidence in the economy's recovery, and although we've still got a ways to go before we're fully recovered. Overseas, the Fed's tapering of its quantitative easing policies, compounded by local political and financial instability, is helping to drive currency sell-offs in emerging markets as investors flee those local currencies and buy dollars. Over the last few years, investors have poured money into these developing economies in search of higher returns. Now that the Fed is cutting back on its easy money policies, weak fundamentals in emerging market countries are being exposed, and investors are moving capital out and driving down currencies and threatening growth abroad. While these problems haven't affected the U.S. economy directly yet, a prolonged emerging markets currency crisis won't be good news for the global economy, and some U.S. companies may even see their growth prospects fall because of declining demand abroad. It's too soon to know how the whole situation will play out, but we're watching it carefully and actively developing strategies to mitigate risk for our clients. Looking ahead, investors will probably see some choppy days ahead as we watch to see how the emerging market crisis affects markets and wait for more domestic economic indicators. Please join us next Thursday, February 14th at noon for our 2014 State of the Markets webinar. You can register by going to our website at hzcapital.com/webinars. Once again, this is Adam Zuercher with Hixon Zuercher Capital Management, signing off on Friday, February 7th. I hope you found this commentary helpful and informative. I'd love to hear from you. Please leave your comments in the section below. If you have any questions about what you've heard in this update, or if you'd like to discuss your personal financial situation, please give us a call at 419-425-2400. We'd be happy to talk to you.